What's up, everybody? What's up? Welcome to the exam breakdown today. My name is D. Kumar. It is a pleasure to be with you. And we're going to be working on some content today. The idea of this kind of a series is to kind of go live and talk about some topics. Mondays, we typically reserve for the real estate professionals looking to get their real estate licensing examinations, either your salespersons or your brokers, in any state, everywhere, anywhere this works. And then today on the exam breakdown on Wednesdays, what I like to do is go over the mortgage loan originator licensing, pre-licensing examination content. And I want to talk a little bit about that stuff today. And the hope is to go through some information, go through, talk about it a little bit, pick a topic, go through some, notes, then talk about some, quiz questions, and then talk about some vocab, and then get out of here. If everything works, we should be in and out of here in about 40, 45 minutes, sometimes a little bit less, sometimes a little bit more. The goal is to get through and be a productive lunch break so you can study. Maybe you're thinking about changing jobs. Maybe you're thinking about moving on. Maybe you're thinking about doing something different. And the goal here is to help you get through. Now, my background and experience with these particular disciplines is pretty vast. I've been doing this for 30 years. I've been in the educational space for well over 25. I've been training folks for a bazillion years when it comes to these particular topics and so many others. And I absolutely love to teach and to do these types of tasks to help people get through examinations. I would like to think, after doing tens of thousands of folks over the years, that I'm pretty good at being able to figure out what's going to be on potential exams, maybe stylistically what they might want to come at you. These topics versus these topics might be relevant. Again, I'm not trying to make any, confessions as that I know exactly what's on your examination, but I've been training this for such a long time and have had a pretty good hit rate on what to learn and what not to learn. And I think that in my sort of explanations, what I'm trying to focus on are the things that you should, more importantly, in my opinion, don't have to learn versus learn, right? So the goal is to try to get you through the examination and to get you licensed and to get you moving on. Hopefully you're going to be the next big, great thing. And that's my hope. And I have lots of former students that are doing quite well in the business, and they love it. All right. So the mortgage business is an excellent business to be in. Suffice it to say, I think it's fantastic. It's very dynamic. And if you do it the right way, it can be structured as such that you can have as much of a work-life balance as humanly possible to be able to do this particular business. Even though there's lots of licensed professionals, I say it all the time, there is a very select few that do business the right way and do it consistently and ethically and properly so that they're able to have an incredible living, an incredible lifestyle, and be able to take care of their family and take care of consumers, which is really, really important when you're looking at it from the top down. Now, speaking of looking at it from consumers, our topic today is all about the CFPB. And we're going to talk a little bit and touch on the Dodd-Frank Wall Street Reform Act and everything else that kind of goes into that piece. So join me, if you will, for a few moments as we talk about the Consumer Financial Protection Bureau as part of the exam breakdown today, January 8th. Let's do this. All right. So let's get into it. What I want to do is I want to talk about the CFPB, just kind of going to their website. I want to talk about who they are, what they're about, and explain how there could be some relevance. As you're looking at your exam outlines, there will be some questions on the Consumer Financial Protection Bureau. So this is important that we understand it, to make sure that we can kind of go through and say, okay, I understand what's going on here. So the bottom line is, let's kind of take a look. And bear with me, I'm streaming this on my own, and we have folks that help me get the content ready and get the content assembled. And then there's me in the production studio right here, and it's me kind of talking to you and teaching. If you have questions, go ahead and put them in the comments. Sometimes in this kind of a condition, I'm not able to get to the questions right away. I'm just kind of teaching and doing my thing. And what I'll try to do is, if there are questions, we answer all questions as they come in, and we'll get back to students. You can always reach out to us, not a big deal. My email address is dee@relicencepro.com. It's dee@relicencepro.com. and just send an email. And if you have questions, we'd be happy to answer them for you. We continue to add more and more dimensions to the nationwide mortgage licensing system examination content. And check out our YouTube channel. It's going to be something where you're going to find a lot of information there to help you with it, and a lot more to come. All right, so let's talk about the CFPB here. Number one, you want to know what it stands for? Consumer Financial Protection Bureau. It's a federal agency, so at the very high level, you want to know that. And it was established in 2010. Something major happened leading up to the creation of the CFPB. And that something major was an economic collapse and crisis that we went through leading up to the 2008, where it kind of hit its crest of the wave right before everything came crashing down. And because of that housing crisis that we went through, we responded with lots of legislation, one of which was a major piece of legislation, a reworking, a revitalization, and reframeworking of the financial industry. And that was the Dodd-Frank Wall Street Reform Act. So Dodd-Frank is what gave birth to the CFPB. Consumer Financial Protection Bureau was created because of the Dodd-Frank Wall Street Reform Act. All right, let me grab something here. Let me just grab something to write on, and let's do red, and let's go about that big. Okay. This way I can just jot notes if there is some. So we want to know that the Consumer Financial Protection Bureau was created because of the Dodd-Frank Wall Street Reform Act, and this was in 2010. I'm just going to write Dodd-Frank Act. Okay, so you want to know the Dodd-Frank Wall Street Reform Act. Now, there are two sections. Dodd-Frank is a massive piece of legislation, right? So 5,000 pages, lots of stuff happening. You don't need to know all of that stuff. You need to know two sections of the Dodd-Frank Wall Street Reform Act that are relevant to the mortgage professionals and what we could potentially be tested on. Okay, so number one is Section 14, and the other one is Section 10. So we got Section 14 and Section 10. I'm just looking over my shoulder to make sure that our audio is pumping properly. Yep, everything looks like it's going well. Okay. So Section 10 of the Dodd-Frank Wall Street Reform Act created or called for the creation of the CFPB. That you want to know. And then Section 14 deals with mortgage reform, lots of it. Okay, so mortgage reform is Section 14. Things like the ability to repay rule and the QM rule and the safe harbor logic and loan originators compensation. So mortgage reform was all Section 14. And Section 10 was the creation of this thing called the CFPB, which its mission is to ensure fairness, transparency, and protection in the financial marketplace. Something very unique happened with the creation of the CFPB. Regulators allowed this one enforcement division to oversee all of these federal laws. And for the mortgage professional, lots of the legislation that you will have to study is enforced and overseen and implemented now by the CFPB. It used to be broken up into bunches of different places. Like some stuff would be comptroller of currency, some stuff would be overseen by the FTC, some things would be overseen by the Commodities Future Exchange. So all kinds of different players were enforcing this stuff on the federal level. And they said, okay, that's crazy. When it comes down to the consumer, there should be one central agency that's handling everything on behalf of the consumer when it's coming to financial transactions outside of equities and securities, which is the SEC. Now let's deal with the Consumer Financial Protection Bureau. So here's something that you might see on an exam. They're going to say, which of the following federal laws is not covered or enforced by the CFPB? There's one big one that you want to know, and it's called the Fair Housing Act. So fair housing is not covered. But virtually everything else that you need to worry about is covered. So like things like Regulation Z or TILA, Regulation X and RESPA, Regulation V, the Fair Credit Reporting Act, FACTA, the Graham-Leach-Belisle Act, Regulation C, HMDA, and then, the Equal Credit Opportunity Act, to name a few, are all covered under CFPB. So the question is, who enforces all of these laws? Who enforces Reg P, Reg C, Reg V? Who enforces these? Well, that's the CFPB. That's your answer. But if they ask you which of the following is not enforced by the Consumer Financial Protection Bureau, that answer is the Fair Housing Act. So fair housing is still enforced by HUD, okay? All right, what is the focus? The focus of the CFPB is mortgages, credit cards, student loans, and other consumer financial products. So that's where they are focused, okay? What does the CFPB do? I'm going to get out of this camera shot. They regulate financial institutions. They enforce federal consumer financial laws such as RESPA and TILA, as I mentioned. So just to name a few that's relevant to you: Regulation B, Regulation C, Regulation P, Regulation V, Regulation X, Regulation Z, Regulation N. Are all of these that they oversee. Now, all of these letters, this is, alphabet soup here, all stands for, so Reg B is for the Equal Credit Opportunity Act, Reg C is HMDA, Reg P is the Privacy Law, Graham-Leach-Bliley, Reg V is Fair Credit Reporting Act, Reg X is RESPA, Reg Z is TILA. You'll be learning these as you start working with your materials wherever you're studying this from. So start to parse through this. One of the unfortunate pieces here is that we definitely need to know a bit about these different pieces of legislation and their letters and everything else, how they're implemented, etc. But work on them. You'll get them. Just stick with it and you'll get it eventually. Responds to consumer complaints. So it can deal directly with the consumer base, which is really nice if you're a consumer. And it promotes financial education, which is, hey, I'm an educator. I think that's wonderful. I think there's always room for more financial education in our population. It's relevant and it's really important, okay? So it's very important to understand how sort of these, machines work to understand what's going on. Okay. Now, some of the federal laws under the CFPB's oversight, as I've mentioned before. Now, this is a good list to sort of start jotting down and learning, because this is going to be something that you're going to come and see. So the Real Estate Settlement Procedures Act, I'm just going to say Reg X. Regulation X, as implemented by Regulation X. Truth in Lending Act, which is Regulation Z. This is going to help you out. I would take good notes here. You can always watch the rebroadcast, by the way. Equal Credit Opportunity Act sits inside of Regulation B. Fair Credit Reporting Act sits under Regulation V. And then the Home Mortgage Disclosure Act, HMDA, which is Regulation C. Now, inside of the FCRA, there's a little law that was amending the FCRA called FACT Act. I talked about that one in a previous live stream. Equal Credit Opportunity Act, Reg B. You want to know protected classes, things of that nature. Truth in Lending Act. I also did that one just recently in a video, so go back and check the archives. You'll find that on our YouTube channel. I went through Reg V and Reg Z, and we kind of did a breakdown of those. And then we just, I think recently last week, right before Christmas, we went into Reg X and talked about RESPA. So these are a list of laws. There are other laws, but relevant to our discussion are these. I'm going to also write not Fair Housing Act. Okay. The CFPB's disclosures and protections. There are some mandatory disclosures that have to be involved, and the CFPB has oversight here. The two big ones are the loan estimate and the closing disclosure. So the loan estimate, if you are going to be borrowing money from a lender in the United States for very specific types of property, residential transactions, generally speaking, that's a good catch-all, you're going to be required, the lender, if you do an application with a lender, then the lender within 3 days of said application must give you a loan estimate. The loan estimate is an estimate of settlement charges, all the charges associated with doing business with that lender and their other service providers. And the closing disclosure is given within 3 days of the settlement or consummation of the transaction. And the Closing disclosure is sort of this recapitulation of what the loan estimate is. So these two documents are hand in hand, and it goes and sits. These two documents sit under the TRID rule. TRID is this marriage of TILA and RESPA and their integrated disclosures. And so the CFPB oversees and enforces this, and they were tasked with the implementation of these two documents. Prior to that, there was documents that the Truth in Lending Act called for. There was documents that RESPA called for. There was a lot of overlap, a lot of redundancy, and a lot of confusion. If any of y'all own real estate or mortgage financed any time in your lives, you know that it's like a pound or mountain of paperwork. And that mountain of paperwork is quite cumbersome. Well, a lot of these pieces of paper are being required under these laws. So the passing of the Dodd-Frank Act created the CFPB. The CFPB was tasked with, hey, look, make this a little bit easier, more transparent for consumers. It's very confusing, and there's a lot of hidden charges inside of these transactions. So the CFPB put their minds to work, and they said, okay, let's come up with the loan estimate and the closing disclosure, where the Truth in Lending documents and the Real Estate Settlement Procedures Act documents all kind of coalesced and made these two documents. Now we have another one called the Homeownership Counseling Disclosure, also overseen by the CFPB, the ability to repay in qualified mortgage rule. This is an absolute live stream in itself, understanding the ATR and the qualified mortgage rule and the safe harbor rule, all important. We're going to do something for you guys at some point with that live. And then the Consumer's Handbook on Adjustable Rate Mortgages. We call this the CHARM booklet or the CHAM booklet where I'm from in Massachusetts. But hey, don't hold that against me, by the way. But the reality here is that if there's an adjustable rate mortgage, then the lender is also required to provide the CHARM hand booklet in the event of it being an adjustable rate mortgage. Let's talk about the consumer complaint process. So in the process of filing complaints with the CFPB, one of the interesting things is that a consumer can file a direct complaint with this federal agency, the Consumer Financial Protection Bureau. They can also certainly file a complaint with the state's attorney general's office, etc. But the way that this enforcement now works is it's pretty good in terms of enforcement, protecting the consumer. So it's very useful that the consumer can directly file a complaint with the CFPB, and that complaint is received and it's looked into. So you file a complaint with the CFPB on their website or their hotline. Companies must respond within 15 days of the complaint. Complaints help identify trends and problem areas in financial services, and there are lots and lots. If you were just to go to look at their website, for example, and you scroll through at the bottom, kind of interesting. The CFPB is standing up for you. 6.8 million plus consumer complaints sent for response. $21 billion in financial relief as a result of the CFPB's actions, and 205 million plus people eligible for financial relief. So the CFPB does a very effective job. One could even say it's a pretty deadly effective job when it comes down to understanding what they need to do, and they've done a really good job as far as being a regulator and an enforcer of what they do. Some of the enforcement actions and the accountability in the financial marketplace. The CFPB can conduct investigations into violations of consumer protection laws. They also work in tandem with the states. Every state, by the way, and on the uniform state portion of the exam, the UST sections that you're studying for in all of the different states, you do want to know that every state has a regulatory oversight like the CFPB, but everybody defers to the CFPB if they need to, but the CFP can also rely on the locals. Like, for example, here we call ours the Division of Banks. So it could be the Division of Financial bureaus. It could be whatever your state calls their enforcer. That's what they call it. Ours here is something called the Division of Banks. Okay. As a matter of fact, part of the legislation calls that states need to have some sort of an enforcement arm, and they do. Now, the state and the federal folks can both impose penalties, fines, restitution to consumers, and operational charges. So all of these things are part of the armamentarium of the CFPB and the states. So they can absolutely go after people financially and criminally as well. Notable cases, the big ones like Wells Fargo, the Bank of America case, and the Navient case. There's so many big monster cases, especially around the 2010 mark with big banks and subprime mortgage lending and everything else. Pretty significant. Go back and check out some of the history and you're like, wow, there's some big enforcement actions. And a lot of enforcement actions still today. Lenders are held accountable by large by doing these processes with the CFPB. So you do definitely see these. You want to know that they can impose penalties, they can conduct investigations, and they can also leverage the states to help them as well. Impacts on mortgage lending practices. It ensures compliance with the laws we were mentioning before. So the CFPB, again, has that ability. It regulates mortgage loan originators and servicers. So the loan originators are now overseen. As you know, we have the implementation and the oversight of things like the SAFE Act, which is the reason why you're studying for the exam that you're studying for. It's the Secure and Fair Enforcement for Mortgage Licensing Act, which is why any state licensed entities like loan originators have to go through this process where you have to do 20 hours plus any state specific hours that are required plus pass a written examination, which is why you're here, by the way, studying for this written examination. And the SAFE Act is the reason why, but the CFPB oversees that. So it has this regulatory framework for loan originators and servicers of mortgage loans, and it prevents any deceptive practices and predatory lending. Two big pieces that really affect consumers and the consumer body is predatory lending and deceptive acts and practices. Some of the key consumer rights that we deal with here: right to fair credit decisions. That's the Equal Credit Opportunity Act and implementation of that law, plus enhancements to things like transparency and information and education and all of these other elements. Transparent loan terms. Non-discriminatory lending practices. HMDA, by the way, Regulation C is a data collection law. Collecting data, the lender must supply that data to regulatory bodies so that they can analyze the data to try to see if there are discriminatory patterns and practices that are taking place. And that's what HMDA data does. It collects information so that regulators can look at the information and make determinations if pervasive discriminatory practice is happening or not. Protections against wrongful foreclosures and servicing errors. There was a huge amount of wrongful foreclosures, illegal foreclosures, and servicing errors and all kinds of stuff. Servicers would delay information. And so having the CFPB overseeing all of this has helped tremendously with that procedure and practice and process, making things better and better over time. Again, I'm looking at the statistics, I'm looking at the information. I'm not sort of trying to inject opinion when it comes down to it, but if you look at the enforcement actions prior to and then post, you will see a significant improvement over the data. And the data is what I'm looking at. I'm looking at specific data as presented by the CFPB, by the way. So go to their site if you're looking for that specific information, and you'll find it there. You don't need to know it. It's not germane to the examination, however. CFPB penalties and compliance. What happens when laws are violated? So there's financial penalties for institutions. The big institutions and the medium-sized institutions will pay penalties. And then when deemed fit, there would be restitution or relief for the affected. Some key takeaways: the summary of the CFPB's roles and impact. It ensures consumer protection in financial services. For us, we need to worry about the mortgage sector. It enforces key laws like RESPA, TILA, and the Equal Credit Opportunity Act. We kind of went through a quick list of those. It promotes transparency and fairness in the mortgage process, and it encourages consumers to file complaints and know their rights. Some of the disclosures, some of the documentation, some of the handouts, some of the information, they've done a decent job trying to explain this content to consumers as clearly and conspicuously as possible. Prior to that, it was very confusing. So I would say that they've made a great sort of big steps forward when it comes to educational presentations to help make a better informed consumer. All right. So that was an overview of the Consumer Financial Protection Bureau. Let's take a short break here, and I'm just going to grab some quiz questions. Let's go through some practice questions first, about 5, and we'll go through those. And then after the quiz questions, we'll go through some vocab, and we will wrap our session. So I'll be back in just a few moments with a breakdown of a couple of other items, starting with the quizzes. What's up? Okay, we are back. Let us get into some questions. Let's do about 5, and then we're going to bust into some vocab phrases. Make sure you leave with some vocab knowledge, and you should be good to go. We can get out of here then, all right? All right, so let's do this. So question number 1. Who created and enforces the TRID rule? TRID stands for TILA RESPA Integrated Disclosure Rule. Letter A, the Federal Trade Commission. Letter B, the Consumer Financial Protection Bureau. Hey. Letter C, the Federal Reserve Board. Letter D, the Department of Housing and Urban Development. And the answer? Letter B, the Consumer Financial Protection Bureau. Okay, that's a pretty classic one. And again, the TRID rule is something definitely on the outlines to mortgage loan originators examinations. So I would suspect you're going to see information on the TRID rule on there, and you're going to see a little bit of information on the CFPB. Question number 2. Which of the following disclosures is required under the CFPB's oversight for mortgage loans? Letter A, the credit report disclosure. Letter B, the Consumer Handbook on Adjustable Rate Mortgages, the CHAM booklet. Letter C, the Privacy Disclosure Act, or the Privacy Act disclosure. Letter D, the Loan Servicing Statement. And the answer? Letter B, the Consumer Handbook on Adjustable Rate Mortgages. So, there's a bunch of different documents that have to be given out. Remember, one of them was this CHARM booklet. Another one would be the loan estimate. One would be the closing disclosure. Another one would be when your home is on the line, potentially, for equity lines. Another one is Know Before You Owe, is another pamphlet that goes out with the LE and the CD. So just a couple of these documents would be useful to know the names of them and that the fact that the CFPB requires them. Question number 3. Which of the following laws is not enforced by the CFPB? Letter A, the Truth in Lending Act. Letter B, the Equal Credit Opportunity Act. Letter C, the Fair Housing Act. Letter D, the Real Estate Settlement Procedures Act. And the answer? Letter C, the Fair Housing Act. So remember, the Fair Housing Act is enforced by HUD. Everything else virtually pick CFPB. So if you're like picking on an exam question, everything is covered under CFPB except the Fair Housing Act. You just want to know that the Fair Housing Act is enforced by HUD, the Department of Housing and Urban Development. Question number 4. What is the CFPB's process for addressing consumer complaints? Letter A, complaints are investigated within 3 business days and no company response is required. Letter B, consumers file complaints directly with their financial institutions. Letter C, companies must respond to complaints within 15 days and the CFPB tracks trends. Letter D, the CFPB resolves complaints immediately and issues fines to companies. And the answer? Letter C, companies must respond to complaints within 15 days and the CFPB tracks trends. And don't forget, they can also impose penalties and fines. They can also refer the enforcement actions down to the Division of Banks, for example, here in Massachusetts, and they can follow up and go after, and the state can also impose fines based off of what the state laws are compared to the federal. Okay, so there's a lot of different layers of enforcement actions that can be taken. Question number 5. Under the CFPB's ability to repay qualified mortgage rule, the ATR/QM rule, what is the primary responsibility of lenders? This is a good one for you to remember as you're getting into the ATR rules and what is a QM loan. Letter A, to ensure loans meet specific standards to be considered a qualified mortgage. Letter B, to approve all loan applications to meet fair lending standards. Letter C, to provide borrowers with the lowest interest rates. Letter D, to verify borrowers' financial ability to repay the loan. And the answer? Letter D, to verify the borrower's financial ability to repay the loan. So the ATR rule, the ability to repay rule, prime directive is to make sure that a consumer has the ability to repay a loan. And so the underwriter needs to look at, or the lender needs to look at, multiple factors of the ability to repay and demonstrate that. The qualified mortgage rule is a type of mortgage loan that is the safest for a consumer, a traditional loan, a 30-year fixed mortgage with the lowest possible rates and repayment terms, fixed rate mortgages, and the debt to income ratios not to exceed certain numbers. So as you're studying your materials, you want to key in on those particular items. They're going to be there. You want to make sure you memorize them. All right, that was some practice questions. Again, let's take a quick break as I grab the other slides, and we'll get into next some vocab phrases. Then we'll do a quick wrap up and have you back on your way. Maybe you're sneaking out during your lunch break to do some studying because you're thinking about making a change or something like that. So I want to make sure you're back before your break's over. So just give me a second. Let me grab those slides, and then we'll do some vocab and wrap this session. All right, we are back. Let's get some vocab phrases in here and do some so you get some of the key terms and phrases onto your fingertips. Let's do that right now. So the first one here is the Consumer Financial Protection Bureau. The CFPB is a federal agency established in 2010 to enforce the consumer protection laws, promote fairness in financial services, and oversee lending practices like mortgages and credit cards. Loan estimate. A loan estimate is a document provided within 3 business days of the mortgage application. It outlines key details about the loan's terms, interest rates, and estimated closing costs. Note that the 3-day rule is dictated by the TILA-RESPA Integrated Disclosure Rule. Closing disclosure, or CD. This disclosure is provided at least 3 business days before closing. It finalizes loan terms, including total payments, fees, and closing costs to ensure borrower transparency. ATR, or the QM rule, the ability to repay mortgage, is a federal rule requiring lenders to verify a borrower's financial capacity to repay a loan, helping prevent risky lending and ensuring loan terms are fair and manageable. Homeownership counseling disclosure is a mandatory document for certain loans informing borrowers about available housing counseling services to guide them through financial decisions and loan responsibilities. Complaint process of the CFPB. Consumers can file complaints about financial products or services. The CFPB ensures companies respond within 15 days, resolving issues and improving industry accountability and transparency. Truth in Lending Act. TILA is a law requiring clear disclosure of loan terms, costs, and annual percentage rates, or APR. It ensures borrowers understand their financial obligations before committing to a loan. RESPA. The Real Estate Settlement Procedures Act is a law designed to protect home buyers by promoting transparency in the mortgage process and prohibiting kickbacks, unearned fees, and excessive escrow account requirements. Equal Credit Opportunity Act. This act prevents discrimination in credit transactions, ensuring equal access to loans and credits based on financial qualifications, not race, gender, or other protected characteristics. HMDA, or the Home Mortgage Disclosure Act. This is a law requiring lenders to disclose loan data. It identifies discriminatory lending patterns and promotes fair access to credit in housing markets. Qualified mortgages is a mortgage that meets specific lending standards under the CFPB. It excludes risky features like interest-only payments and ensures borrowers are likely to afford the loan. Consumer Handbook on Adjustable Rate Mortgages is an educational booklet explaining adjustable rate mortgages, or ARMs, and it details potential payment changes, risks, and benefits to help borrowers make more informed decisions about the adjustable rate mortgages. Servicing Disclosure Statement is a document provided early in the loan process that informs borrowers whether their loan servicing, or the payments that are being collected basically is what loan servicing is, may be transferred to another company. As you may know, if you have a mortgage, sometimes the mortgage servicing gets transferred. Affiliated Business Arrangement Disclosure, AFBA, is a document required when a lender refers a borrower to a company they have a financial interest in. It explains the relationship and affirms borrowers' choice in service. Fair lending is a principle enforced by laws like the Equal Credit Opportunity Act and the Home Mortgage Disclosure Act, ensuring all borrowers are treated equally and fairly in credit decisions without discrimination or bias. Escrow account is a special account managed by a lender to hold funds for property taxes, homeowners insurance, and other costs, ensuring timely payment on the borrower's behalf. Kickbacks. Kickbacks are prohibited under RESPA. These are illegal payments or favors exchanged for referring settlement services. Kickbacks inflate the costs and undermine fair competition in the industry. This is a violation, by the way, of RESPA, and it's a Section 8 violation. Annual escrow statement is a yearly statement from the lender showing deposits, withdrawals, and remaining balance in the escrow account. It ensures transparency and compliance with federal regulations. Federally related mortgage loan. A federally related loan is a residential mortgage loan secured by a first or subordinate lien, that means second lien, on real property, that means real estate. These loans are subject to laws like RESPA, the Real Estate Settlement Procedures Act, for consumer protection. Unreasonable escrow charges. These are excessive amounts required by lenders for escrow accounts, which are prohibited under the Real Estate Settlement Procedures Act. Regulations can cap these charges to ensure affordability for borrowers. Financial penalties by the CFPB. When financial institutions violate consumer protection laws, the CFPB imposes fines, mandates operational changes, and sometimes requires compensation to affected consumers. Disclosures required by RESPA. These include the loan estimate, definitely study, closing disclosures, and escrow disclosures, all aimed at ensuring borrowers understand their financial obligations and the total cost of home ownership. All right, so there you go. CFPB, the Consumer Financial Protection Bureau, an enforcement arm, oversees all of the federal laws for the most part that are relevant for your examination. They are definitely sort of the sheriff, if you will, and they oversee and they have enforcement actions. They implement rules and they take care of business on the federal level, created by the Dodd-Frank Wall Street Reform Act under Section 10 of that act. The other important section we learned is Section 14, which calls for mortgage reform. When you are tasked with looking at different questions here, make sure you understand the spread of where we were. And again, you don't need to know a tremendous amount overall, but there could be a specific sprinkler or two of questions regarding the CFPB. Hopefully this session was helpful. Again, my name is D. Kumar. You've been checking out the Exam Breakdown. Every Wednesday we do mortgage originator education. Every Monday we're going to do some stuff for the real estate professionals, for salesperson or brokers. I hope our content is helping you get through your exam. The comments have been spectacular. People all over the country are passing their examinations. I'm very proud of you as an instructor. I'm very proud to be doing this for people to help them get through these examinations to be able to move on and get the best out of their lives. Thank you very much for checking us out. I will see you live next Monday or Wednesday. Thanks for checking out our content. If you haven't subscribed to our channel, it would mean the world to us. Let people know what we're doing and see if we can help them out as well. All right. Study hard, study well, and we will see you in the next session.